90% of traders are stuck using lagging indicators. Indicators that tell you where price has been, not where it's going. And that's exactly why this indicator that predicts exact future ranges is a game changer. It doesn't just tell you the direction of price, it predicts the precise support and resistance levels before they even form. First, head over to TradingView and pull up any market you want. I'm using the 15-minute time frame on the pound-yen, but this works on any market, any time frame. Click on Indicators and type in Predictive Ranges. Make sure you select the one by LuxAlgo. This isn't your typical support and resistance indicator that shows you what already happened. The Predictive Ranges indicator uses advanced true range algorithms to calculate future ranges before price even gets there. What makes this indicator so special is its three-phase analysis approach. You've got the red resistance zone at the top, where price is likely to reverse downward, the green support zone at the bottom, where price should find buying pressure, and the central equilibrium line, your trend direction compass. But here's what separates this from every other range indicator you've seen. When the price reaches one of the lower levels of the predictive ranges, we can expect the price to reverse. If the price exits the predicted range, new levels are given in real time, and they do not repaint. This means you're getting fresh, accurate predictions constantly with mathematical precision. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step, without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, before you start trading with this insane indicator, let's get your settings dialed in. Click the gear icon next to the indicator. The length you see here controls the ATR calculation period. Higher values will tend to return ranges of equal width. For most markets, keep this at 200 as it provides the perfect balance between accuracy and responsiveness. Now factor is your range width controller. Higher values will return less frequent ranges, each having a higher width. Start with 6.0, as this gives you ranges that are wide enough to avoid false signals, but tight enough to catch real moves. Timeframe lets you analyze higher timeframe ranges without switching charts. Keep this on chart for now, as we'll optimize this later for different markets. Source should stay on close. It is recommended to use input sources on the same scale as the price. Now, there are three powerful ways to use this indicator, each one more accurate than the last. First is the range reversal trading. You want to wait for price to approach either the red resistance or green support zone, but don't enter immediately as you need confirmation from rejection wicks or engulfing patterns right at these levels. Now, when you see strong rejection from the resistance zone, enter short with your stop loss above the resistance and target the opposite zone for a clean 2-to-1 risk-reward ratio. For support zone bounces, it's the same process in reverse. Second is trend continuation setup. This is where most traders miss the big money. Users are able to easily estimate trend directions by looking at the central levels of the predictive ranges, which represent an estimate of the price central tendency. If this central level increases, it means the price is uptrending. If it is decreasing, price is downtrending. When the central line keeps moving higher with each new range, you've got a confirmed uptrend. Wait for pullbacks to the green support zone, as these represent your high probability long entries. But instead of exiting at resistance like most traders, hold through to the next range's resistance level. This captures the entire trend move, not just the range-bound profit. Third and finally is the breakout confirmation. The truth is, when price breaks above resistance or below support, most ranges fail. But with predictive ranges, breakouts are different. The indicator immediately calculates new ranges in real time. You want to enter the breakout direction with your stop at the broken level and target the new range's opposite zone. These breakouts often lead to the strongest moves because smart money is repositioning for the next range cycle. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Here's what separates professional traders from amateurs. They know one size doesn't fit all when it comes to indicator settings. For Forex pairs, you want to set length to 250 and factor to 8.0 because Forex needs wider ranges due to bank manipulation and false breakouts. This filters out the institutional head fakes that trap retail traders. For gold trading, use length 150 and factor 5.0. Gold moves explosively, but also consolidates frequently. These settings catch the real moves while avoiding the chop that gold is famous for. For crypto markets, drop length length to 100 and factor to 4.0, as crypto ranges are tighter, but break more violently, which means you need faster adaptation to catch those explosive moves early. For stock, length 300 and factor 7.0 works perfectly because indices respect ranges more consistently than individual stocks. Market conditions matter too. During high volatility periods, news events, market opens, increase your factor by 1.0. During quiet consolidation, decrease it by 1.0. And here's a pro tip. Enable the time frame feature and set it to 4 hours for intraday trading. This shows you the bigger picture ranges while trading shorter time frames. Thanks for watching, and I'll see you in the next one.